Hello, chart watchers, and welcome to this Friday, January 19th, Market Watchers Live show with your hosts, Tom Boley and Aaron Swindon. For those of you joining us for the first time today, welcome to the show. And for our regulars, welcome back. Well, it's been another interesting week in the market. Let's take a look at the current action. The Dow Jones Industrial Average struggling a little bit so far today, down. The S&P 500 in a bifurcated fashion, actually higher. But the real strength today is in the NASDAQ and especially the Russell 2000, where we are seeing much higher percentage gains, especially in the small cap area with Russell 2000 up close to 1% today. The 10-year Treasury yield, we're going to talk about this later in the technical news segment, but the 10-year Treasury yield is moving to a high we haven't seen in a few years. And normally when we see the yield moving up, that means money's coming out of treasuries. And we normally see continued move higher in the S&P 500. So that is a big development that we need to keep an eye on. Looking at the Dow components, IBM, the worst performer today, down over $6, about $6.50, almost 4% on the day. IBM also posting a daily double of sorts. It's the worst performer in the S&P 500 as well. General Electric having another horrible day today. Volume has really increased on General Electric the last couple of days as it takes out the earlier lows. Really no bottom in sight at this point for GE. Nike having a very strong day. Nike's the leader in the Dow and in the S&P 500, so it has a more positive daily double today. Really nice day in Nike breaking out. We'll talk about that in a bit. AutoNation, the second best performer in the S&P 500. You can see a beautiful move higher early in the day. This is a specialty retailer, and we are seeing some strength move back into the retailing area. In the S&P 500, Corvo is the second worst performer behind IBM, and you can see the action to the downside. Very heavy volume today here. And then on the NASDAQ 100, pretty interesting, but we have two semiconductors, one leading the NASDAQ 100 and the other trailing. But NVIDIA having a really nice day today, up almost $6 on the session, while on the other end of the spectrum, you can see SWKS down roughly $3 or 3%, and that is the biggest decliner. And with that, I will bring in my co-host, Aaron. How are you doing on this Friday?
I'm doing great, TGIF. It's a good day, I'm sure.
Yeah, we're actually experiencing a little meltdown today. I'm not talking about the market. I'm talking about South Carolina with the snow.
Finally digging yourself out a little.
Well, I don't even have a shovel. I wasn't expecting this in South Carolina.
I can only imagine.
Yeah.
Of course, we're looking at, high 70s today. What can I say?
Yeah, we are not looking at high 70s, but we are looking at getting higher than 32, which is almost like a veritable heat wave coming into the south right now. But it is supposed to warm up this weekend, so I'm looking forward to that. But I tell you what, there's no, you don't need to heat up the stock market. We've been seeing continuing push to the upside for a few months, and that 10-year Treasury yield, something else, breaking out today, perhaps to a really significant level that we'll talk about in just a bit. But before we get into all that, I'll let you go through the announcements and our agenda for.
Sure. Well, the first thing is Chart Watchers Weekend. So if you haven't signed up for the twice monthly newsletter that Stock Charts sends out for free, you need to do that. And you can do it at the bottom of any of our home pages. It adds you to the email list, and that's all it adds you to. And it's very easy to get off that list. But we have, John Murphy, Martin Prang. You usually get some high profile analysts in there that you want to definitely read over the weekend. And then we have Scott Carney, harmonictrader.com, I believe. And we're going to have him as a guest next Wednesday. So we're looking forward to that. Today's agenda. Well, we're going to start off with my discussion about the decision point market indicators. I'll give you a refresher and let you know how they're calculated, etc. Followed by an earnings spotlight. Tom's going to look at a few stocks for you. And of course, the 10 and 10 to 1, where we take your symbol requests. And our first one is going to be Autodesk, ADSK. And finally, I'll finish up with the decision point sentiment update, and give you an idea of what I'm seeing as far as sentiment and what that means for the market. And with that, I'm going to hand it back to you, Tom, to go over some of the technical news today.
Yeah, it's really interesting. I went through a couple of those charts, especially GE. I have the 10-year Treasury yield. I'm going to get into the economic reports. There was just one today, but really GE is kind of a big news item here. I mean, if you take a look over here, you can see toward the bottom right part of your screen, we've now broken back down below the lows that were established in November and December, and that volume has really picked up to the downside. So, it looked good temporarily. We were kind of giving GE a little bit of love. Broke back up above its 20-day moving average, pulled back, held it, moved to another high. But you can see it really never got back up above this key resistance. It had support in early November at around the, 1980, 1990 area, bounced up above 20, and then we lost that area of support on major volume. And now on this pushback to the upside, GE has failed. And that is a little bit of a concern, I think, for the overall market. So we'll have to kind of watch that, at least for the Dow. One of its components performing so poorly and continuing to add to that decline. But let's get back to that 10-year Treasury yield. We did have one economic report out today, and that was on the January consumer sentiment. The reading came in at 94.4. Market was expecting 97.0, so we did have a slight miss. And that's just a survey of, I think, 500 households around the country, and it really has to do with how they feel about consumer spending and that sort of thing. So, while it definitely is important, it's not one of the bigger economic reports out. And I think the 10-year Treasury yield, what this is telling me is that it is focusing on the big picture. And we've had a lot of really good economic reports out over the past several months. And you can see this huge move now that we've made off the September low in the 10-year Treasury yield. And if you're not familiar with the relationship between the TNX and the S&P 500, let me just give you a quick recap. Actually, that's not what I wanted there, but there's the 10-year Treasury yield. Let's take a look at the S&P 500. Now, since that early September low in the 10-year Treasury yield, let me go back to that real quick so you can see this low. You can see the huge move up through the end of October, sideways consolidation into November, and then in December, we pick right back up again and go higher. Now let's take a look at the S&P 500. And with the S&P 500, you see the huge move up in September and October. Sideways action, at least for the first half of November. Looks like maybe for about 3 or 4 weeks we went sideways while that 10-year Treasury yield was consolidating. But then when the yield broke out again in December, take a look at what happened here. And again, it comes down to really, somewhat common sense, I think. When the yield's going up, it means that your Treasury prices are going down. Folks are selling Treasuries. That's why the yields go higher. And if folks are selling Treasuries, you have to wonder, okay, what are they doing with those proceeds? Well, normally, if you expect the economy to strengthen, you want to be out of Treasuries or at least maybe reallocate some of what you have in fixed income and move it into equities. And so I think that's what is taking place here. And that's why, generally speaking, when you see the yield moving higher, that means Treasury prices are going lower and the S&P 500 goes higher. So I think this is pretty significant because you have the 10-year Treasury yield currently at 2.63%, a little bit above 2.63%. And if I pull up the weekly chart here, you can see that this is actually now clearing the double top that we had at the end of 2016 and early 2017, also clearing the high that we saw back in 2015. And if I stretch this chart out to say 5 years instead of 3, you will see that this is now at the highest level that we have seen since back in the middle part of 2014. So this is a 3.5 year high, and it's really nothing to sneeze at because, again, the relationship between the TNX and the S&P 500 is pretty clear. They tend to be very positively correlated. So when you're getting a breakout in the yield, I expect to see the S&P 500 go higher. One of the relationships or one of the historical patterns that I've been talking about recently is that when you get the S&P 500 and NASDAQ and so forth to really have a strong end of October to middle of middle of January period, that is the most bullish period of the year. And when we have more than our fair share of strength during that period, it tends to lead to more strength going forward. Now, we did come up a little bit short on the S&P 500 yesterday at the close. We didn't quite get into the top quadrant of October 28th to January 18th periods. When we look back over the last 67 years, this past year would have to get in the top 16 in order to be in that top quadrant. It just missed. but it was very close. It's at the top of the second quadrant. And these are, anytime that we get periods of strength from that October 28th to January 18th period, we tend to see it continue for the next 3 months. And a breakout in the 10-year Treasury yield, I think, adds to some of that. So certainly something to keep in mind. Recently, we started to see some biotechs being bought out. It was just reported a couple days. We saw Celgene come out and announce an acquisition of Juno, Juno. While Celgene didn't do a whole lot here, as you can see, it did make the shareholders of Juno pretty happy as the stock rallied from about $46 a share up to $70 on the news. Well, today we have Biogen, BIIB. First, I'll pull up this chart, and you can see it's near a high in a very nice bullish cup hitting the right side. And Biogen actually announced an acquisition of ACOR, Acorda Therapeutics. And while Acorda is not getting the type of reception that Juno got, you can see we are actually up 10.8% today on the stock, and we're challenging highs. Just a couple months ago, we had the big gap down. The stock was down to $17 a share. Now it's all the way back up to around $28. So pretty interesting there. Earnings continue to pour in, and for the most part, they continue to be very positive. I've got 6 stocks here that reported earlier this morning, so I'll go through these. CFG, this is Citizens Financial Group. So we got another bank. The stock reported earnings per share 71 cents versus 67. The top line, $1.48 billion. The market was expecting 1.45. So we had a top line beat, a bottom line beat, and take a look at how this stock has been performing heading into its earnings. Clearly, this was anticipated, but we are still continuing to break to a high. So really good action in CFG. Then we have RF, which is Regions Financial Corp, another one that had performed really well heading into earnings. We had slight beats on both the top and bottom line. Revenues $1.46 billion. The market was looking for 1.45, and then the earnings per share came in 27 cents. The market was expecting 26 cents. Another good one here. One that I was really anticipating, Schlumberger, SLB. You look at the huge move that we made coming out of the bottom late November, and then about mid-December really just took off to the upside. Well, Schlumberger today rewarded its shareholders with a pretty good report, even though it is down today. The top line, $8.18 billion. Market expecting $8.12 billion. So slight beat there. And then earnings per share, 48 cents. Market was only expecting 44. So while we did gap down, I think a lot of this was just buy on the rumor, sell on the news kind of a deal. I would think any kind of a test, that rising 20-day moving average would be very interesting down the road on Schlumberger. Getting back into the financial space, SunTrust reported, STI. SunTrust actually fell earlier today because they did report revenues that were less than expected. $2.27 billion. The market was looking for $2.31 billion. But the bottom line certainly was a positive surprise, $1.09. Market looking for $1.05. So the weakness took us back, tested that 20-day moving average, came close to testing price support as well. Just keep in mind there is a negative divergence on this stock. And at the very top, we did print a bearish engulfing candle. So I would be pretty cautious with STI in the short term. One thing definitely holding this stock up, as well as many of the banks today, is the fact that that 10-year Treasury yield is making the breakout. And this is a group, the banks, that tend to do extremely well during periods of rising interest rates, along with life insurance as well. A couple other stocks, SYF also reported they beat top line $3.98 billion versus $3.96 billion. Earnings per share came in at 70 cents. The market was expecting 63 cents. And with this move up, you can see it did have a negative divergence. It has struggled recently, trying to reset near that 50-day moving average. And that is also the top of gap support and price support, coming in at around 36.5. So this one looks like it's got pretty good support at about that level. Finally, last earnings report I wanted to go over is WIPRO, WIT. The stock did beat top line $2.14 billion versus $2.06 billion, but earnings came in as expected at 6 cents. So of the 6, this is the only one that didn't beat its earnings expectations this morning. The stock is moving lower. However, it's held that rising 20-day moving average for about the last 6-7 weeks. And after moving well below it earlier today, it's trying to climb back up above it, holding gap support and that 20-day moving average would be a pretty good move for WIT. Let's get into some upgrades and downgrades. Upgrades today, Square, SQ. This is big because we are trying to take out that prior high. This really looks to me like a cup, maybe even an inverse head and shoulder. It's not quite as clear, but I think if I maybe shortened it to 3 months, maybe it would be a little clearer on the chart. But here we came down, came back up. Perhaps you could call that the left side of a neckline. Came all the way back down, printed the inverted head, came back up, got the right side of the neckline right at $43, came down, printed that right shoulder almost exactly where we printed the left shoulder. And now with the upgrade, we're getting a breakout, and already you can see the volume heavier than we've seen the past few days. So this is going to be a big day technically for Square. If you don't see the inverse head and shoulders, or you don't believe that that's what's happening here from a technical perspective, I do think that this potentially could be a longer term cup. If we look at that weekly chart, you're going to see a huge move up. Notice the pullback came down and held the rising 20-week moving average. Anytime you get these stocks that move straight up and they look really weak on the daily chart when they pull back like this, when they start losing moving averages and heavy volume, I think it's always a good idea to take a step back and look at that weekly chart. And I think here, this makes this pullback back to $34, $35 much more appetizing from a long perspective than you would see looking strictly at the daily chart. So keep that in mind. Let's see. We have also reporting or being upgraded NETIs. Now, there were several upgrades and downgrades. I'm just going through the ones that look kind of interesting to me technically. NETIs has been trending lower, is below its 20-day moving average. Got a little bit of a pop this morning from the upgrade, but it still has some work to do. To the downside, you've got the top of gap support and price support closer to 310. And I think it's trapped between that support level at 310 and that declining 20-day moving average. WYNN, we talked about this one yesterday. This is Wyndham Worldwide. It's a hotel. Made a big breakout yesterday. I think Aaron was talking about how it looked really good on the PMO. Well, today it got an analyst upgrade. The stock up another $4.81. Really important to get these breakouts with increasing volume. To me, it's a sign, pretty good sign of accumulation. Next up, Nike. Talked about this one earlier, making a really nice breakout. Nice cup, little handle back to the 20-day, and now the breakout. Volume already about equal to what we've seen the past several days. Nike looks really good here. And then the final upgrade I have was Philip Morris, PM. This one actually is interesting because off of the move, notice we did pull back below the 20-day moving average. A lot of consolidation for about 5 weeks. Well, this is now breaking out to the upside above it, and it's trying to break this downtrend line. So Philip Morris looking a little bit more bullish. Just a couple of downgrades to go through. One is ALGN, Align Technology. This has been one of the best performers in the market for a while now. And the stock did get downgraded, but it probably has more to do with valuation than anything. I didn't read to see exactly what the reasoning was for the downgrade. But the stock had been straight up. It was very overbought. This is one of those situations where if you're looking to get into a stock like this, you almost want to see a downgrade, something to pull the stock a little bit lower. It is only down about 2%, though. I would be looking more toward that rising 20-day moving average. MKC, this one looks really interesting to me. This is McCormick and Company. I think, and I think it might have been on the weekly chart. So let me pull up the weekly chart. I think there was here it is. Very nice ascending triangle. And I think this pullback is coming back to test the lower uptrend line. We got clear tops at around that 104 area on this longer term weekly chart. This is a really bullish long-term pattern. Now you can wait to get the breakout over 104, or maybe a little riskier move is to try and get it on this pullback into the rising lows that we've been seeing for the last 13, 14 months. A couple more. HOLX. Again, this is a downgrade, but remember, negative divergence here. Look at the higher price. Look at the lower MACD. So really what you want to see is a test of gap support and that rising 50-day moving average, and almost got it today with this downgrade. And the last one I have here is IPHI. And IPHI, Infi Corp, making a pretty big move. Now, this to me is a very significant type of a breakdown, at least on the daily chart. Very heavy volume yesterday on the move lower, and now today it gets downgraded and it's down again. Let's just take one quick look at the weekly and see if that tells us anything different. This is a really important level. We want to make sure that we hold it. I think if you go back and you look at the breakout that occurred back in the middle of 2016, right here, notice all these pullbacks holding on to support. This one with volume increasing now, looking to break down, and the weekly MACD starting to roll back over again. So this is a stock on this downgrade that I'd be really careful with, especially with that increasing volume. So with that, I am going to turn it over to Erin and let her get into her DP workshop.
All right, let's hit this thing. So today I'm going to be talking to you about the DP market indicators. In particular, I'm going to talk to you about the Swindon trading oscillators, the decision point chart pack, because of course, once you see these indicators, you're going to want them. So I'll show you how to get to them. They are exclusive, the ones I'm going to show you, but there are a few additional that I'm going to talk about. PMO analysis is going to be a great one. So stick around for that for sure. And then once we've done that, I'm going to show you that we do have these other market indicators. And while we haven't created them, they are still in our market indicator chart pack. And if you were here Wednesday to see Tom McClellan, I know a lot of people were interested in using his oscillators, and the decision point market indicator chart pack already has the charts available. So I'll be showing you how to get a hold of those as well. So first, I want to just show you very quickly in a screenshot here. There we go. This is the chart pack, the decision point market indicators chart pack. And honestly, I'd have weeded this out because it was really, really large. But we dropped a bunch of our indicators back, oh gosh, a year and a half ago. We had so many calculations, and basically with a lot of movement around in stock charts and how we calculate in the cloud and all of that sort of thing, we decided to drop a bunch of them. So if you do download the chart pack, we're in the process of cleaning it up, but you might end up with a lot of chart lists that don't have any indicators in them. So there are indicators in here, and these are the ones that I use, and I will print this in the Market Watchers live blog recap so that you can, if you do download the chart pack, you can figure out which ones you might want to just get rid of. So, but I'm going to, as you can see, we have a plethora, as I like to call it. We have the Swindon trading oscillator, which is one I'm going to show you first. And then we have the ITBM, ITVM, and again, these were decision point created. And finally, I want to show you our PMO analysis charts. And I'm going to talk to you a little bit about how that works. And of course, I don't have it on here, but I'll be talking about it later in the program about the RIDEX ratio. And that was something that Decision Point also created. So very proud of our market indicators. But the first thing I want to explain, because sometimes there is a little bit of confusion, I'm going to take you over to Chart School. There is a lot of confusion sometimes between indicators and market indicators. The indicators are the ones you apply and you use overlays for, the MACD. They're specific to that particular stock, ETF, or index that you're looking at. The market indicators take, the breadth, advances, declines, that sort of thing. You combine a lot of what's going on in the market throughout an index, and that gives you your market indicator. So it gives you an indicator of what's going on in the broad market, as it says here. So if you want to learn more about these indicators that I'm going to show you, it's very easy. Once you get into the Chart School, you can click on the market indicators, and there's a great introduction. So you can see the dictionary for all of them. And in here, you will see the Decision Point ITBM, ITVM, and the Swindon trading oscillators, which I'm going to show you. And of course, there's the RIDEX ratio. And basically, these are your Chart School articles that will tell you exactly how these are calculated and that sort of fun stuff. So I'm going to start with showing you some of these indicators, and then I'm going to go back and show you how to download that chart pack that we talked about at the beginning. So first, I'm going to talk to you about the Swindon Trading Oscillator. Get over to that screen. All right, so we're going to talk about the Swindon Trading Oscillators. It actually works out that ST is in there because these are short-term market indicators. And it's an overbought, oversold indicator. I'm going to show you how you can use it. It's basically using the breadth. It uses advances and declines, and the STOV uses advancing volume and declining volume in its calculation. So here is the actual calculation for the Swindon Trading Oscillator. And again, I'm not going to run through it, but you can see that we use the breadth to come up with what's going on with the Swindon Trading Oscillators. So let's go ahead, and I'm going to take you to our, let's see where, okay, back here. All right. So I'm going to start by looking at, so here's that chart pack. And again, I'm just going to go into the Swindon Trading Oscillator chart list. And so it's not just the S&P. We have the STOs for most of these. I'm not sure if we still have I'm going to just check really quickly, but I don't think we have it for the sectors. Yeah, that was part of the data that we did lose. But you can get the Swindon Trading Oscillator for the major indexes, and that's what we basically are using it for anyway, is to get a broad market look at what's going on in the short term. So you can get your charts right here for the Swindon Trading Oscillator. And we have it, like I said, S&P, NASDAQ, OEX. I know these are all still working as far as the Swindon Trading Oscillator is concerned. So I'm going to actually take you into my chart list, and it is the Decision Point Live chart list. So these charts, all of them, are available to you to click on and add to your own chart lists. Maybe you have just a DP chart list, and you can have these, the ones you like in it. So I'm going to start with showing you, as I said, I have what I call the short-term indicator chart. Here we go. And these are the Swindon Trading Oscillators. Now you'll notice I did add in here the intermediate term, which I'm going to go through later. But it just helps with my analysis. I didn't used to do this, but I find it a lot more helpful to see what's going on in the intermediate term. It's a more smooth curve. Obviously, it's an IT indicator. But it's nice to get a feel for how both of these oscillators are relating to the ITBM and the ITBM. So again, it is a overbought, oversold indicator. So we're looking for readings that are overbought. And when we get those, I'm going to take this into annotation for you. All right. And here's what I mean by the overbought, oversold. I think most of you are familiar, but the overbought readings are the ones we're going to watch, right? And we look for what's going on when they're bottoming. And so it gives you an idea of what to expect. So bottoms on these indicators are oversold. So the expectation after a bottom would be the market to rise. And in this case, it was a very short rise, but in the short term, it's a short-term indicator. That's what we got. And you can see as well over here with these bottoms, we did get a little bit of a rally here in the short term. Again, short-term indicators. Tops. Now, tops typically are, you're overbought, and so you look for a decline after them. I think this is actually instructive because, let's face it, not all indicators are created equal, and they don't always work. There's no magic silver bullet, I guess. I'm not sure what you want to call it. So they don't always work, but they do give us a pretty good idea of what's going on. I would say that since last November, the market tops, or the STO tops, have not really amounted to much as far as a decline. But, we're in an almost parabolic bull market right now. So you will see generally after these tops, we're going to get maybe some consolidation sideways, or you're going to see a little bit of a decline here. But these are how you would use these indicators. It's not necessarily what the actual reading is. It's about where it's located and what direction it's going in. So those are the short-term indicators. And again, you can find these in the Decision Point live chart list. And I'll just take you over there very quickly. Just go under blogs, find Decision Point, and there you go, Aaron's live chart list. And so you'll see all of the ones that I talk about. And I'm going to just go down quickly to find the short term. But you can see it's very full. But they're all in here annotated for your pleasure to look at. The big four I put in there. Here's your short-term indicators. So if you like this, you can just click on it and it'll come up in your workbench. If you want to save the annotations, be sure to go in and just pretend to annotate a little something. And then when you save it, it'll save all of those annotations. Because I know a lot of people, you go in there and you're like, oh, I have these annotations, and then you hit save and they're all gone. So that's a way you can keep those available to you with those annotations. So let's go ahead. I'm going to come back here and we're going to look at the intermediate term indicators. Okay. And before I do that, I'm going to explain them a little bit. All right. So we're looking at the intermediate term breadth momentum oscillator, the ITBM, and the intermediate term volume momentum oscillator. So one of the cool things I think with our indicators is we don't just use the breadth numbers. A lot of we like to have a second component using the volume. And I think that does give you a pretty nice comparison. So it's, again, this is another overbought, oversold indicator. And in this case, the direction is very important because these move very slow. And so you really want to look at what direction they're going in. It'll give you a better feel for internal strength or weakness in the market. And basically the calculation is kind of a piggyback off of the McClellan ratio adjusted oscillator. And, Carl worked with Tom McClellan a lot when he was starting his Decision Point website. And, we got the permission, I guess you would say, of using the McClellan oscillator values in order to calculate the ITBM and the ITBM. So as you can see right here, whoops, I didn't want to do that. Go back, there we go. You basically, here's the equation. You're taking the ratio adjusted value and you add that to the 10% EMA. And that's one of those two that you use to calculate the McClellan oscillator. There are two EMAs. And so you're taking the 10% EMA and then you calculate a 20-day EMA of that result. And that's how you get these momentum oscillators. So let's go ahead and I'm going to show you the chart where we were. And again, this chart, along with some of these others that I'm showing you, are available in the Decision Point Market Indicator Chart Pack. And also, you can find these annotated as you're seeing right now in the Decision Point live blog chart list. So you go to the Decision Point blog, remember, and at the top, you can click on the live chart list, and that's how you can get to these. And you can watch the show because on every Monday, I go over all of these indicators for you so you can learn more about them. So I'm looking at the ITBM and the ITBM. And I always include the PMO. You'll see it on almost every chart I have. I may not, concentrate on it like on this chart because I'm concentrating on these, but I like to also have it just for, to get a clue. So in this case, as you can see, the PMO, we've got strength going on, but it's now higher than these previous tops, which would give me a little bit of pause. But at the same time, I'm looking at my oscillators here and they're not competing with tops yet. And so that's good to me. That tells me that there is still room for these to move higher, that strength can continue to increase. Right now I'm looking in that thumbnail, of course, and these readings are as of yesterday. because they are market indicators. You have to wait for the market to close in order to get all of the data to calculate these. So pay attention over here, what the date is, so that you know what kind of, what you're looking at. So I'm looking in the thumbnail, and actually, you could say we're starting to see some weakness as far as the ITBM, as far as the volume. We're seeing that one turn down, but we've still got the ITBM rising at this point. And overall, I would say with these indicators, I don't get too wrapped around these twitches and wiggles, as I like to call them. What's really important are the crossovers, or the almost crossovers, because that's when you really get the sign of something good getting ready to happen. And I can't annotate in a line here, but you can see when we had these crossovers, and they also combined with the PMO crossover right about here. And it gave us really nice warning that, well, not warning, it gave us an alert flag that things are looking good right now. Now you can see how, again, this one's topping a bit and this one is decelerating. Not a surprise. We're looking at a little bit of a pause here right now over the past 2 days, if you want to call it that. That's about the best we're going to get, I think, out of this bull market. Doesn't seem like it ever wants to go down. So it'll be interesting to see how this all floats out. But as you can see, that's really the mainstay of our intermediate term indicators. Now, as you saw, of course, we have a whole lot of other market indicators in this chart pack. And I'm going to show you the PMO analysis charts because that's based on our PMO. And if you want a more detailed description of the PMO, you can go into Chart School, of course, and read the article there. But I also did a PMO workshop. You could probably find that on our YouTube channel through a search, but it was quite a while ago. But that's an excellent way as well to get to know the PMO. The PMO analysis charts, though, it's a market indicator because we basically are combining what's going on in that index as far as each component. So for example, we're tallying up, okay, how many of and we're looking at the S&P 500, how many of those stocks are rising? What percentage? 58%. So we know that over half, we're seeing them rising. Percent PMO crossover buy signals. How many of them are, and you can look up here at the PMO, how many have crossed up above their signal line and are currently on a buy signal? 68%. And now we're looking at how many have a PMO above zero, 82%. So what I like to do, and you can see here in the past, I like to look for the oversold and overbought readings on these PMO analysis charts. And I think they do give you a pretty good sign as to what's getting ready to happen. I'm going to stretch this out because I want everybody to be able to see it better. Actually, I'm going to customize it. Hang on, and now you're getting to see how you can. Oops. Apologize. I had a little bit of a problem there with my mic. All right. Let me know if I sound way too loud or anything. my soundboard just turned off, so.
You sound good. Everything's good.
Okay, good. All right. Thank you, Tom. Appreciate it. So here's how you can customize the width and height of your chart. And I'm just going to make this 1,000 by like 635. I think that'll get us to where you can see all of this chart better. Yes, much better, huh? Okay. So what we do is we look for the bottoms, and I've annotated this from a while back. I have mine annotated in these chart packs. So anyway, what I'm looking for again are the overbought, oversold readings. And in this case, these are oversold readings. You're looking at right here. This is how many have a PMO that is rising. And when you get down to levels where less than 25% of the S&P 500 have a rising PMO, that tells you there's extreme weakness. It's very bearish. Again, oversold readings. So what do you look for once you come out of these bottoms and you start seeing PMOs rising?
Hey, Aaron.
Yes?
Actually, can you turn your volume up just a little bit?
Okay. There, is that better?
It's better for me.
Okay.
That'll be better.
Yeah, my soundboard took a tumble. So, all right. So here are our oversold readings, and look at where we're going after them. You usually are going to get a rally off of these. So that's what I look for. Currently, we're looking at some highs here. But again, generally doesn't cause a problem. I'm going to annotate these really quickly. Here we go. And then we'll close on up. All right. So right now we're looking at a top, and what typically happens when we have a top. All right. So typically when you see things get very bullish like this, you start looking for a decline. But in this market, I start looking for consolidation off of tops. So, and you can see we are getting them based on these. You can even see here when this started to flatten out, that's when we started to look at this possible pause. I mean, I think it is somewhat of a pause, but in any case, that's how you would use the PMO analysis charts. And as I said, there are plenty more market indicators in here. For example, we've got the volatility indexes for various, so S&P, OEX, that sort of thing. So you can see more of those. And then as I was saying, we have the McClellan Oscillator charts all here. And it makes it very easy. They're already calculated for you, and they're already set up with overlays. So there's your EMAs that you use to determine what the McClellan oscillator readings are, et cetera. I'm not going to go too far into it, but that's where you can find those. And I mean, we have quite a few, even though we dropped some. I mean, we have some great charts in there, and highly recommend you check it out. So if you want these market indicators, what do you do? And actually, I'm going to share over here on this one so that we can see exactly how to go in there to one that doesn't have any chart packs. I'm going to go ahead and show you how to download them. So go to your account, hit manage chart packs, and you're going to see all of them. They are free, but you do need to have the ability to have more than one chart list. So it is only available to extra members and above. But here's the indicator chart pack. And again, we have a lot of others that you can download as well. This one being, probably the one I use the most. And, you just hit install, tells you it's free, tells you what's in it, and just come down here, install. And yes, I want to. And now if I go to my chart lists, I have all of these indicators already sitting in here. Now, if you get this and you're like, I don't really want all these charts, you can weed them out, or it's very easy to come back in, manage your chart packs, and say, you know what, I don't really want that. I'm going to remove it. And so that's how you would do that. And then once we overhaul the chart lists, the chart pack, we will have a way for you to reinstall them. So that'll be useful as well. So with that, I'm going to conclude my decision point market indicators discussion. But I do want to give you kind of a brief summary of what I covered. And so we looked at the chart pack and how to download it and use it. And of course, we have the exclusive market indicators that I went over, which were right there. And we also have those other market indicators available, like the McClellan oscillator, breadth charts, et cetera, all in that chart pack. So that gives you an idea of the decision point market indicators and how best to use them. And with that, Tom, I'm going to rest my voice, and I'm going to hand it over to you for, I believe we're going to look at earnings.
Yeah, we've got earnings spotlight. Before we get into that, there was one question that came in. Maybe you can
Sure.
just answer this. The question said, and you were talking about some crossovers, and I guess one question that came in is how might we find those crossovers before it's too late?
Yes. Well, as far as the, you're talking, I'm assuming the ITBM charts, possibly. You can basically, if you want to scan You could scan. I think there's a way to scan on it, and you would want to use similar to the PMO scan. But really, with these indicators, it's really useful to just give them a look once a week, maybe twice a week. Or if you're thinking things are looking uncertain, you're kind of wondering what the indicators are telling you. So you can look at them yourself through the decision point chart list. You can read on Fridays Carl's weekly wrap. He goes over those. And anytime you see DP alert in the title of one of my blogs, I will also be going over those indicators. So if you just check out the DP blog, you're going to get plenty of information. You will have an idea of when we're getting these bottoms, when we're getting these crossovers on, say, the ITVM and ITBM. But yes, with those charts, I do prefer, and I'm going to go back here to my live chart list. With these, I do wait for the crossovers. And so I know that's likely what we're talking about. They're very slow moving indicators. I'll look at these every other day. You probably won't miss it. And again, you won't miss it if you read the Decision Point blog or the headlines. I will tell you in a headline that we've got negative crossovers on the intermediate term indicators or that sort of thing. So you'll have access. You'll know when these things happen. So were there any others?
That was pretty much it. That was excellent. Excellent job.
Yes. As far as those PMO crossovers, though, before they go too far, go and to the blog, the Market Watchers blog, and you'll see the, I'm just going to show it very quickly here. Oop, I'll just pick one. And if you go to the bottom of the blog, there are links and to the channel for YouTube, etc. And there's a link to my PMO scan. And this will give you, if you use this scan, you will get, you will generally get the stocks that are bottoming. The PMO is bottoming and has been rising for 3 days. So that's how you can do that. I don't have in here to tell me that it didn't have a crossover. So sometimes you will get some stocks in your scan list with some crossovers. So that's, but this is the best way to get yourself notice as far as those.
Awesome. All right. That was a great presentation. We're going to switch it over now and take a look at earnings spotlight. In this segment, I am going to give you a few stocks that have recently reported. I do not own any of these stocks. These are stocks that I am currently watching. I think that they could present some great opportunities. And the first one that I'm going to show you is getting pretty close to its first potential buy point, and that is IBM. IBM, mentioned earlier, was the worst performing stock in the Dow. But keep in mind, everything's relative, and this is coming off the heels of a huge run-up in IBM in the first couple of weeks of 2018. It also broke this little bit of a triangle. It had gapped up with earnings back in October. You can see the lower highs, the higher lows. So this move to begin 2018 actually broke out of that symmetrical triangle, which I think is very bullish. We've been going straight up. I don't like to chase these stocks. I actually think that the pullback here on IBM, and you might call it more than a pullback because it's heavy volume, but as long as it holds on to some key support areas, I think that I'd be okay with IBM. So there was a breakout that took place around 160, 160 and a half. And you can see that the rising 20-day moving average also is up at that level. IBM just yesterday was up over 170. So moving back down into the low 160s, from my perspective, actually increases the reward to risk quite a bit. I would be looking at 160 and a half or 161 to hold as support. If I wasn't going to use that level as support, and let's say I wanted to go down maybe to the top of gap support here, then I would consider 2 entry points. I would consider an entry point at the 20-day, and I would not have a second one until we got down to this level. And then I'd use the top of gap support as a potential stop. But I think IBM looks pretty interesting. They came out, they beat on the top line, and they beat on the bottom line. And I think also the reaction to their earnings report and the strengthening on their chart would suggest to me that this is a stock I want to keep an eye on. Another stock, and this one's, I'm giving you a different size stocks. Next one is Fuel Cell, FCEL. This stock is extremely volatile. So it's not for everyone. They blew their top line numbers out of the water, 47.9 million versus 25 million estimate. And their bottom line, they reported a loss of 17 cents, but it was much better than what Wall Street was looking for, which was a loss of 22 cents. It did make a nice gap up here after earnings. You can see the volume come in. It went all the way back down, tested the bottom of gap support and the rising 20-day moving average, and now it's starting to move higher again. I think this one's got a shot to go back up to that October high, maybe around 235 or so. But, like I said before, it does carry a lot more risk. The third one I have is KBH. This is KB Homes. KB Homes reported top line beat 1.4 billion versus 1.36 billion. Bottom line beat 84 cents versus 77 cents. Look at the reaction. I love that reaction. Not a big fan of $36 not holding, but you do have the bottom of gap support at about 34.5 and the rising 20-day at 33.96, and that is rising rather rapidly. So I would look for this stock to hold somewhere in the neighborhood of about 34.5 on a pullback. And the last one I had was PRGS, which is Progress Software. Beautiful move up. This one has continued moving higher with very heavy volume. I think the top of gap support, which is close to 48, along with this rising 20-day moving average, which is now 46.81, I think we'll probably find some support on any pullback down in that range. So these are just a handful of stocks that I think look pretty interesting. So again, to recap, we've got IBM, Fuel Cell, KB Homes, and Progress Software. I think all of those look interesting. And with that, let's go ahead and take it over to the 10 in 10. What do you have?
Absolutely.
Aaron, what was the first one?
The first one is Autodesk, ADSK.
Okay, Autodesk. I'm not sure if we looked at this one or not recently. Short term, I really like what's taken place. I like these pullbacks holding the rising 20-day moving average, but the volume itself, you can see, is picked up a little bit, which is good, but it's nowhere near what we saw in the sell-off. So we did take out that 114 resistance. That is the the bottom of gap resistance. Here's where you finished at 130 before this gap down. I believe this was earnings related. And pretty good example why I don't like to hold stocks into earnings. The stock looked pretty good technically, and it just completely fell apart when they disappointed. So what I would be watching here is the rising 20-day moving average. So I'm okay with it, the way it's been behaving. I like this pullback to test the 20. Another one just a couple of days ago got very close, and we keep bouncing. A breakout above the recent high. So I'm going to draw this in just a little bit above that 116 level. I think if we can clear that and get some volume coming into it, then I think it could take us up maybe to the next level, which for me would be around the 120, 121 area.
All right. The next one we have is Pilgrims Pride, PPC.
All right, PPC. Well, it's coming up, getting a pretty big test. It's been selling off on some pretty heavy volume. It did come down close to a support area. I'm going to just draw where I think the support needs to hold, which is right there, $28. We didn't quite get all the way down there, but we got close. We got the MACD starting to turn up, but we got to get through that 20-day moving average. Downtrending stock is basically defined as a stock that continues to put in lower lows, lower highs, and struggles to get through its moving averages. And you can see we are now testing a key 20-day moving average. A failure here and a pull back down closer to that 28.25, 28.50 area, I think presents the best reward to risk entry into Pilgrim's Pride. Otherwise, if you're looking at it from a bullish perspective now, you really want to get this breakout back above the 20-day.
Okay. Next one we have, staying in the PPs, PPBI, Pacific Premier Bank Corp.
PPPI?
PPBI, Bravo.
Oh, B. I thought you said B. Twice. I still didn't hear it right.
Sorry.
Let's not blame old age.
Well, it could be my sound. Remember, I dropped my soundboard. So
yeah, let's blame that. That sounds a lot better for me.
Right. Me too.
Yeah, it looks to me like we had a beautiful move up September, October, pulled back, but now we seem to be trending back up toward that recent high. So I think the stock looks like it wants to challenge this 42.25, 42.5 area. Breakout above would be very bullish. And any pullback, what I'd be watching is for the rising lows here. and I don't have an exact, but somewhere along that line. And maybe because it coincides with the recent lows here, I would be watching 39 to the downside. So I think we're okay in this range, and a bullish outcome would be a breakout above, say, 42.50 with some increasing volume.
All right. Let's see. Next one, TRXC, and that's Healthcare Trans and TREX.
Well, these are some new ones.
TRX.
TRX.
Trying to do that.
TRXC, is that, did I get it right?
XC, yeah.
Okay, well, I don't know what's going on with this stock, whether it's a pharma or it's been a huge move.
Medical equipment.
What is it?
Medical equipment.
Okay.
Yeah.
Well, I do like the space, so that's a good thing. It has been pulling back quite a bit, though, after a huge move up back in October. I'm guessing maybe this had to do with earnings because of the massive volume, the big push to the upside. To the downside, we haven't quite gotten down to a price support level, but we certainly have pulled back quite away from that move higher. See a double top before the big volume breakout here, all the way down at about 155. So that would be the best entry from a reward to risk standpoint. But because this stock's fallen so much, even from $2, for those who are really risky, don't care about taking a little bit more risk, you have maybe 45 cents to the downside here. Maybe work your way in, build a position perhaps. But if we get a breakout and start to make a move back toward where we were back in October, obviously you can see there's a ton of potential upside in this stock. So it's not really my kind of stock. It's seems to be a little bit small for my liking. But yeah, I mean, I wouldn't be surprised if we get a breakout to see some strength return here in TRXC.
All right. Next one from the consumer staples food retailers SYY, Cisco.
All right, it's the other Cisco.
Exactly.
Yeah, the food retailers, actually, I think I talked about recently. I think this group is really starting to look good in 2018. We're getting a nice breakout here on the stock with decent volume. I mean, it's not huge, but it looks like it's on pace maybe to do a couple million today, which is decent volume. So a breakout here, I think, would be great. Notice after the move up, pullback, hits that rising 20-day moving average 2 or 3 times, and then continues its move to the upside. So I think technically the stock is performing really well. I'm still bullish here.
Okay. Let's see. The next one is a GNRC. And that is industrial building materials.
Yep, I do own this one. We've talked about, this was actually the one that was breaking down when we had Bruce on, if you remember. And he convinced me this could be a spring. So I was like, okay, I'm going to spring into action. I'm going to hold it here. And it's continued to do really well after struggling. It actually had a big move up. And then I think with earnings gapped up, kind of tailed off, had this huge red candle, needed to consolidate for a while, did have this quick false breakdown into gap support, and then quickly came right back up above that 48 level. And it's been pretty much straight up since. I think it's going to make a move here toward the recent high. So in annotating it for me, I love the way it's acting. And what I'm looking for from a target perspective is up closer to 54, maybe 53.5 or so. So I think GNRC looks good.
Okay. See, the next one I have a lot of interest in the utilities sector. So I went ahead and pulled XLU for you.
Yeah, XLU is kind of interesting. And I saw some questions in the chat room. I was going to try to answer it in the mailbag, talking about the XLU and the 10-year Treasury yield, some things to look for. The biggest problem is just we're having a huge move up in terms of Treasury yields. And that is, most equity traders are going to ignore utilities in this type of an environment. You can see the huge volume that's been coming into the downside. I don't think that utilities are necessarily going to be a bad investment. I just think that they're going to be a bad one on a relative basis to the S&P 500. So to me, I guess maybe technically that is a bad investment if you're not able to keep up with the S&P. But the big problem for me is just that there's a lot of distribution taking place. And I normally don't pay a lot of attention to volume on ETFs, but when there's this kind of volume and this kind of action to the downside, it's telling me that not only are the individual utility stocks going down, but there's a lot of ETF holders that just don't want to be involved in the XLU at this point. So, this is a if we went back a little bit further on the chart, you could see that this is a pretty key area of support between about 49.50 and 50.50. So I think there's a 50.50. I think there's about a 50.50 chance at this point that we're going to get a rally back, maybe just to test that falling 20-day moving average. But in a market where we're seeing a breakout in the 10-year Treasury yield, unless we have a big reversal today in the TNX, I personally would probably stay away from the XLU here.
Okay. The next one's pretty interesting. World Wrestling Entertainment, the WWE. I don't follow this stuff, but I would wonder what the heck happened at the end of October to get this thing out of that basing pattern.
Yeah, beautiful move up at the end of October. I'm guessing earnings, just because most earnings come out that time of the year and with the heavy volume, but it's continued pushing higher. We had one little hiccup here with heavy volume, went below the 20, but notice we came right back up above it, which is exactly what I'd want to see. I wouldn't want it to fall apart and not be able to reclaim that 20-day moving average. And now we're trying to make a breakout here. I would watch to see what kind of candle prints today and make sure this isn't a false breakout. But it looks at this point like we are trying to make a continuing push to the upside. MACD's turned back up again. Do have a negative divergence, but if the volume comes in to support the stock on this move to the upside, keep in mind that negative divergence, that the MACD only takes into account price. So volume will matter here on this move. I'd like to see a little bit more volume come in. It looks like we're on pace, maybe close to 1 million shares today, which would be a good, a positive development for the stock.
Absolutely. All right, from the materials sector, Century Aluminum, CNX.
All right, CNX. Well, it's kind of breaking, well, not really breaking down. I don't like seeing it pull back below its 20-day moving average. We had a nice, what appeared to me maybe to be a ascending triangle in play. So coming across here, and by the way, you can see that shooting the shooting star candle right here marked that top, and we've come back across here, kind of have a double top at about the 15.25, maybe even triple top 15.25 area. But what I was liking was the fact that we had this what appeared to be a nice ascending triangle. Now, technically, when you only connect 2 points, we could have connected those 2 points. We could have then connected those 2 points. We could now connect these points. So that's the beauty of trend lines, or maybe not quite, maybe the opposite of the beauty of trend lines is when you're connecting 2 points, they can quickly, your trend line can change. I really don't want to see the lows taken out, though, here. So I think on this one for CNX, that recent low, you can make an argument with this move up, sideways consolidations bullish. So as long as we hold about 1380, 1385 on CNX, I'd be okay with it. Ultimately, what you want is a heavy volume breakout above 15.25.
All right, the last one I have is for our Canadian viewers, Village Farms International, which is VFF.to, and they are in the weed space.
Weed as in?
Marijuana.
Marijuana, okay. I didn't know what weeds. Wasn't sure what weeds we were talking about. Well, it must be in the marijuana space because the chart's really high. Couldn't resist.
We could really, I think we could keep going with that.
Yeah, we could have probably next 10 minutes on this one. But, looking at the chart, though, I do think that the stock looks pretty good. It's been trending higher for quite some time. I mean, we could go through and connect these lows, and you can see this is a pretty solid trend line. I was just saying how when you connect 2 points on a chart, a trend line can be kind of weak because you just keep moving the trend line. But when you get a trend line like this one that connects multiple lows along the chart, I think it really starts to paint a much more bullish picture. And the other thing that I would suggest too is if I grab this line and on a Mac hit Command in the left. Oops, it didn't work that time. Let me try it again. There we go. You can see you can drag the same sloped line with the annotation tool and check out the highs also using that same slope. So what we have here is a really nice channel on the stock. So as long as this channel stays in play, I'd be okay with it. Now, if you see the channel break, and I'm going to put in a price support level as well, because we had a breakout above about 710, and we've gone down and we've tested on multiple occasions. Here was the top. So if you go back down and lose $7 or $7.10 to the downside, especially with increasing volume, you're losing your channel support and you're also losing price support. So I think this is one that you could probably stick with. You do have to give it, a little bit of room. It's at 821. You got to give it down to 710, but it also has made a huge move from $2. So, it's all relative. It's been a big ride to the upside. And to me, as long as it holds above about 710, I think it's okay. Although a move down below 750 and that trend line would be the first crack in the foundation here.
Absolutely. All righty. With that concludes our 10 and 10. You did really well today, I have to say.
Thank you very much.
And there are the symbols that Tom covered. I will have those loaded up in the Market Watchers Live chart list, which you can find the link to at the top of the Market Watchers Live blog. And with that, I guess I better get into that last market update. I tend to try and forget that. All right. Let's see. I was going to go here. All right. Here is the candle glance so that we can get an idea what's going on across the board here. And as Tom noted earlier, we're seeing some problems with the Dow Industrials, yet the S&P 500 and the NASDAQ, and especially the Russell 2000 are off moving higher. Russell 2000 just continues to make new highs, intraday highs. So really interesting. I'll show you that chart shortly. We can see the TSX is also up. Got a little bit of a pullback, but we're heading back up here, trying to get back some of those gains. And with the Treasury yields, they are up, and I know Tom's talked at length about those. UUP is rising at this point, been pretty choppy as far as trading this morning for UUP. Commodities are down. I'm looking at a reverse flag here. That's not very pretty. But USO is doing okay. We're seeing it dropping right now today, but it's still reading at 1267. Not bad, not bad. Gold, we can see gapped up and is now moving mostly sideways here. So that's not a surprise when we can see that UUP, well, UUP is up right now, which is a little bit of a surprise, but gold, I think, has got a lot of internal strength right now. And as you can see, it's doesn't seem to be bothering it that the dollar is up currently. VIX is falling. We're seeing, I'll be talking about this shortly in the sentiment section, but we're seeing investors feeling a bit more comfortable than they have over the past, over yesterday, and even at the beginning of today when we were over 12, but continuing to fall. You can see advances are leading declines currently. Take you over very quickly to our market summary and give you a look at how each of the sectors are doing. We can see the sector spiders, discretionary and staples are sitting at the top. So aggressive and defensive there. And I know you follow that ratio a lot, Tom. I might look interesting right now. Utilities and technology are the only sectors currently negative. And we can see as far as airlines, no, let me get this organized. There we go. That will help. Staples and discretionary, though, still at the top of this list. Energy and technology and industrials, as well as healthcare, are all moving negative direction right now. U.S. industries, paper, retailers, disk drives at the top. And the laggard right now is natural gas, which is down almost a percentage point right now. Not a pretty chart, I suspect. Yes, getting ready to test that 200-day EMA. So we've got a possible double top here after this rally. And look at the PMO turning over and just about ready to hit the signal line. And to complete this, I do want to go show you the Russell 2000. I'm going to look at IWM for you. Here we go. And I usually follow the ETFs. This is also this chart you will find in my Decision Point Live chart list. So anyway, we can see, yes, we've got a really nice day going on for the Russell 2000 IWM. I'm seeing a symmetrical triangle starting to form here, and those are continuation patterns. So the expectation, honestly, would be higher prices and new all-time highs for IWM. You can see the PMO is, while hesitating somewhat, is still rising nicely. So I think small caps are still looking very healthy And I would expect to see coming out of this symmetrical triangle a breakout and possibly a test of more all-time highs for IWM. With that, I'm going to conclude the market update. Did you have some information you wanted to share, Tom, about what I just talked about? I know you usually have a good comment or two.
Yeah, I was actually just going to show a couple of stocks that actually are showing unusual volume today. One of them, I believe, may have reported earnings, MLNX. And this is a stock that had been basing for a number of years and just recently made a big breakout. And I think with their earnings, I'm pretty sure earnings came out because I think I saw them on an upcoming list. I didn't see the earnings, excuse me, but I do. It does look like they have beaten expectations. But rather than focus on a short-term chart, I just wanted to show you that on a longer-term chart, this is a stock that's made a huge breakout after basing for a period of years. I think it's listed as a semiconductor stock, but it is also part of the disk drive index, MLNX. So anyhow, this was a big breakout. You can see that rising 20-week moving average is strong. If we go over to the daily chart, you really can't see all of that consolidation. You just see a stock that's very overbought. So it certainly could use a pullback, but the volume trends are great here. And again, off that longer term chart, you can see that that was a pretty big breakout of a base. Two other stocks also with strong volume today. TEAM, T-E-A-M, Atlassian Corp. This is a software company, and it is pulling back today after its earnings and testing some price support. And then one that really looks interesting to me, this is in the entertainment space, LGF, or maybe it's LGFA slash A. But here you can see off of some sideways consolidation for about the last 6 or 7 weeks. Check out the volume coming in yesterday and then heavy volume again today as it makes a very significant breakout. I didn't look at the weekly chart, so I'm just going to pull that up very briefly. But yeah, you can see again, off of this uptrend, sideways consolidation, bouncing off that rising 20-week moving average, that we are getting a breakout. It looks like LGF slash A, Lionsgate Entertainment, probably wants to make a run at that 2015 high, close to $40, $41. So that's still, what, $5 or $6 away. So maybe 15, 17%, something like that. But anyway, those were just 3 stocks that were unusually heavy in terms of volume. They're not going to be in the high volume list. It's just relative to their own volume. They are very heavy. And you can see down here on this weekly chart for LGF slash A, the volume yesterday and today really contributing to a huge spike in its volume this week as it makes this breakout. So that's all I had.
Pretty. All right. With that, I'm going to go ahead and start our sentiment report, give you an idea of what investors are thinking and what our money managers are thinking and what are they actually doing. So I'm going to show you my sentiment indicators. This also is included. I can't remember which chart pack it is, but if you click on some of the chart packs for Decision Point, you will find the sentiment chart pack. Again, I haven't cleaned them up since we started them, so you might have to clean them up a little if you download them, but it really, you definitely will get these. The 10-day moving average of the put call ratio is the first one I want to talk about. And typically, of course, I look at this as overbought, oversold type of an indicator. And right now we're looking at very oversold readings. And typically, you know, when you come out of, when you're oversold, that means everybody is extremely bullish because the number is getting smaller and smaller and smaller. And that means, of course, that the call, as far as the ratio is concerned, is higher than the put. So that's why we're getting very bullish readings right now. And honestly, I think that's not good for the market because with sentiment being contrarian, in fact, I really should invert these scales. With sentiment being contrarian, that is actually bearish, not bullish for the market. So right now we're seeing the ratios are very low right now on across the board, and we're not seeing them turn up just yet. Could end up moving deeper, lower, more bullish than we currently are even now. So that I think is a warning sign. Of course, when I say warning sign, I'm not talking about a giant correction or price shock. I'm more than likely we're looking at neutral, meaning you're going to move sideways. We'll get consolidation, maybe some pullback. That's just pretty much following the rules, the bull market rules that we're under right now with this crazy bull market rally. It's really, you just don't get a whole lot of decline. So what I wanted to point out on this particular chart, move this thing away. I am noting, again, very bullish readings here. We have, if you look at this, more than half of the American Association of Individual Investors are bulls. This is sort of, everybody can go in and take this particular poll. So it's always interesting to get the pulse of what pretty much your average investor is thinking right now. And right now, they're very bullish. There are very few bears right now. So our ratio is at the top of the zone. And typically, as I've marked here, when you get ratios this high, you will see some consolidation or a pullback. Because when people get really, really bullish, that's the time that's the time everybody's on that bandwagon and the wheel will fall off. So that's how we look at sentiment. If you've got everybody on the bandwagon, if you've got, Money Magazine or some of these longer term type publications, and if they're all bullish, well, that's late news, and more than likely the market is or will be moving lower. So right now we're looking at very bullish readings on our AAII chart. Now I'm going to look at the name exposure index. This is the National Association of Active Investment Managers. So where are the big managers putting their money or not putting their money? At this point, the exposure did go up over the past 2 weeks, but we're not at some of these extremes that we saw earlier. So I'm looking at this as somewhat bearish because it is elevated, but not particularly. I mean, it's not overly elevated to a point where, like these readings, where you would really expect a downturn. So when I see the exposure rising just a little bit, but we're still in average territory, and you can see, obviously, prices are still moving higher on the S&P as far as the weekly chart is concerned, I would look at this as more neutral to somewhat bearish, because there is still, 67 is the reading for the exposure index. And like I said, a little bit above average. Next, I want to take you to our, not the gold silver sentiment. Let me go over here. And away we go. Okay, this is the RIDEX ratio chart. And as I talked about at the beginning of the show, this is an indicator, a market indicator that Carl invented and created. And the beauty of this is RIDEX Guggenheim has a basket of bear funds, a basket of bull funds, and then the money market. And they post every evening how many assets are sitting in each. And so what we do is we calculate how many assets there are, and then we watch which direction they're going. And then we calculate a ratio to give us an idea of, are we looking at very bullish or very bearish readings? So right now, just looking at the actual ratio, again, bull assets in the denominator. So you're going to get smaller and smaller numbers. The more bullish, the more assets are in the bull funds. And what I have been noticing, and Greg Schnell pointed out honestly to me, is we have this rising bottoms on the RIDEX asset ratio. And we're now starting to hit some highs here on the ratio. And I think you can just look right here. Typically, when you start seeing it get really high, that's, again, obviously, we're seeing extreme bullishness. And when we see extreme bullishness, we should start to expect either some consolidation or even a bit of a downturn. And so that's what I'm kind of looking for when we get these high ratios. We had that breakdown last week. And so I was thinking, okay, we're finally shaking it out a little bit. We're going to see some less bullish behavior here. No, we ended up coming right back up above that. Let's look in particular, though, at where the money is going. The beauty of this particular indicator is it's not a poll. You don't just say, yeah, I'm bullish, yeah, I'm bearish. No, this is tracking the assets. This is tracking what actual money is doing, which is why I love this indicator so much. So right now, what we're looking at are bull funds. I'm going to take you over to the thumbnail to get a really good picture. But we can see bull funds still decreasing in the assets. So people are not investing in those bear funds. I'm sorry, the bear funds. And then we can see as far as money market is concerned, mostly sideways. So we're not seeing a lot of money being pulled out or really even being put in. I would say this gives you an idea. We're looking a little bit at rotation maybe going on here. But then I look over here at the bull sector assets, and they're flattening out. We're not seeing more assets really flowing into this area. It's flat. And so I consider that to be a kind of neutral situation. And honestly, it could be considered just slightly bullish because it's telling you that the bull funds were really not seeing the money flow going there. So with that, let me give you my conclusion slide here, let you know what I just talked about. And yes, let's see. I don't have that chart. There we go. Okay, that's better. All right, so we looked at the put call ratio. Right now, I do see bullish readings, which is typically bearish for the market. AAII is still bullish. If you recall, investors are still looking, feeling pretty good, and that generally means bearishness. The exposure is increasing somewhat, and like I said, but it's still average, so I'm looking at more neutral to bearish for the market here. And then the right-X ratio. Money seems to be staying in the market, and that ratio managed to avoid the breakdown. So everything's still looking pretty bullish as far as the ratio. So when you look at the conclusion here, the polls are showing those bullish readings. Money remains mostly unchanged in the positions, and overall sentiment is neutral to bearish for the market when you add up all of these different things. So with that, I'm going to conclude the sentiment update. And I think we were going to look real quick, though, Tom, at our watch list. How are our Monday setups actually doing right now?
Yeah, I can pull that up for everybody. Couple pretty good choices this week so far, and I think both of them are improving their technicals as we speak. So first, I had gone with LAMR back on Tuesday. The stock at the time, I think, was trading at 72.31. Currently, it is 73. Let's get an update. Just get it. Currently, it is at 73.81. And I've actually got it set up here so we can even talk about the percentages. All right, so right now, LAMR is up 2.07% since we spoke. And the thing I like about it is technically we're getting back up above this 20-day moving average. So the price support that I was looking for that had been holding around 71.5 continues to hold. Now we're getting a break back up above the 20, which is good. And then I know you had KELYA. And you were in at 28.66. Mm-hmm. We were at 29.46. So you're up 2.79%. So right now you have got me by about 0.75%. And we got one more day to go. I need somebody to get on that horse and get it into the.
Look at that double bottom. I just want you to see. And today's candle is now executing that double bottom. So I'm looking for $31.
Yeah, I like this one because of the breakout back here on very heavy volume above this sideways consolidation. I mean, I could throw in a little annotation, but your double bottom that came in right here, and then if you take the tails that came in after the heavy volume gap up, this is really key support. You can see we actually tested it on the second one, taking out that first low intraday. So it was giving a little bit of a hint maybe that it was going to go lower. Instead, it reversed and came back up, and we continue to see nice movement here. And if we take a look at the recent highs from back, the reaction high off that first low, and then come back down, and you can see we hesitated a little bit here at 28.50, but now you've gotten that breakout. So yeah, I think this is going to be a race to the finish come Monday. So it'll be interesting to see how we finish up here.
This is one I wish I had invested in. It's always, that hindsight 2020. And if you're interested, I did do my Decision Point blog article this week on KELYA to let you know how my anatomy of a trade would have been. So I went into history and took a look as it progressed chart by chart and gave you my analysis as to what I would do as far as trading it. And it did show up on the radar again on Tuesday. And so that's why I picked it.
Awesome. Well, we had a couple of questions came in, so I'm going to go ahead and grab one of them here. I think we have a few minutes. One question that had come in, and this was probably from the last week or so, but the question was, why is there so much volume in early 2017 on the indexes? And I think this is you got to be really careful here. Arthur Hill, I know, wrote in an article, and it was back, I believe, in around December of 2016. I just pulled up the Internet Index, and you can see what the question's referring to. You can see at the end of 2016 and throughout 2017, all the volume, when you compare it to the prior years, there was a change in how the volume was calculated back at the beginning of December of 2016. And again, Arthur Hill wrote in the blog, I think it was in the Don't Ignore This Chart blog, but I'm not positive which blog it was. But if you go back in the archives and you look back in December of 2016, he wrote and talked about how the calculation for the volume was changing. And so, of course, big part of my analysis includes volume. You know, I want to have confirming volume when I get breakouts and so forth. You have to be real careful looking back and saying, well, the volume in 2017 was much stronger, therefore there's a lot of accumulation going on. I think you'd be drawing an improper conclusion if you say that. I think instead, you really need to, if you're going to compare volumes, I think you have to compare current volumes over, say, the last year. But if you go much before December of 2017, I think you're going to be, December of 2016, I think you're going to be drawing some erroneous conclusions from the volume. So just be careful about that. There was another question that came in the chat earlier about the DDX, which is the disk drive index, wondering about the components. I can tell you that that is not a separate industry group on stock charts, so you can't go in and drill down like you do in some of the other industry groups. But in that disk drive index, you've got Broadcom, AVGO, the stock I brought up earlier, Mellanox, MLNX, Micron, MU is included in there, Network Appliance, NTAP, Seagate Technology, STX, Western Digital, WDC, and then some other smaller stocks, I think Silicon Motion, SIMO, SIMO, and a couple of others I think also are in there, Pure Storage, PSTG, and there may have been one other, I don't recall. But anyhow, those are the stocks that make up that index. So if you're a fan of the $ DDX, those are some of the individual stocks that you could take a look at.
Yep. So I did get a comment from somebody about our Monday setups that, they said, you could pick some ETFs and you could short. And I'm thinking, I never short in a bull market, not like this one. Why would I look for shorts in this market? It's just not my style. You're not going to see any shorts from me for Monday setups.
No, nor for me. In a raging bull market, the last thing I want to look for is shorts. The area that was probably the weakest, and we've been seeing a little bit more strength over the past several weeks, has been gold. Mm-hmm. I mean, if I was looking for an area, and only because it's performed so poorly versus the S&P 500. So it's been an underperformer, but even underperformers, can still be groups that go higher. And we've been seeing that with gold recently. One last question that I'll answer, and then maybe we can take a look at what we think about next week is, I think it was in this.
Yes, we should make our vote, whether we think
there was a question that came out about the 10-year Treasury yield and what to do with the XLU. I just wanted to point out quickly, here are some times when the yield is in the back of this chart. Here's the line for the 10-year Treasury yield. This is the line for the ETF that tracks utilities, the XLU. And then down below here is the XLU relative to the S&P 500. Okay, so when the yield is rising rapidly, you can see that utilities actually do continue higher. We're in a bull market. So we typically have wide participation from all areas of the market because so much money is coming into the market. But if you look during these periods of rising prices, check out the relative strength of utilities, meaning this is not, if you're trying to outperform the S&P 500, the money that you put in the XLU is not going to help you during a period of rising Treasury yields. At least typically that is the case. So if you believe that this breakout in the 10-year Treasury yield is going to lead to higher Treasury yields, just understand that you may still see strength overall in the XLU, but on a relative basis, it's not going to be very strong. final comment about, what we were going to talk about next week, and I'll give you your 30-second recap as well.
Mhm.
I am a little concerned because it's option expiration day, and we really haven't seen a meaningful pullback. We saw a scare back on, I guess, Tuesday or Wednesday. But we haven't had a meaningful pullback. I'm not saying we're going to have a huge decline, but I'm a little nervous with the market in the near term, and I've certainly built up a cash position for next week. So I'm just going to say neutral for next week. I'm afraid to say bearish.
Okay. I'm looking at the VIX. I'm looking at I look at my advanced declines, the net advanced declines volume, my climactic indicator chart, and new highs. And right now, the VIX got really high, really, for compared to what we've been seeing, and it's punctured that bottom Bollinger Band on my inverted scale. So I'm going to sit on being bullish next week, believe it or not. I know the sentiment was looking a little bit bearish for the market, but rather than going neutral, I think we're probably going to, be able to move out of this pause. I think it's just a pause.
Well, I think the 10-year Treasury yield would agree with you. I mean, we're seeing money rotating away from Treasury, so I tell you, it's hard for me to get bearish on any of these weeks. And I think sticking with your positions as long as they hold up and hold support probably makes sense, because who knows how far this bull market goes.
Yeah, absolutely.
All right. We got the upcoming schedule coming up on the screen. So if you want to go through that, Aaron.
Sure. Well, of course, we've got Chart Watchers Weekend. So look in your email box. And if you haven't signed up for it, sign up for it at the bottom of any of our homepages. And then we have Scott Carney coming in Wednesday for our guest appearance. And you'll definitely want to come in for that. I'm interested in learning more about harmonic trading. And that's pretty much the upcoming schedule. And let us know how we did today.
Yeah, it's exciting getting a new guest on here next week. I'm really looking forward to the harmonic trader. Definitely going to be interested in seeing, some of the strategies there, how you play this kind of a market. That's just been straight up without many pullbacks. But yeah, end of another week. Hard to believe. I want to thank everybody for being with us today. As Aaron mentioned, please remember to complete the survey as you exit. We love to get your feedback. Let us know what you think of Market Watchers Live. And, if it's helping you, love to hear that. If there are things that we can do to change to maybe provide some different segments and so forth, send that along. It's really up to you, kind of open-ended survey. So let us know what you think. As a reminder, Market Watchers Live airs 5 days a week, Mondays through Fridays from noon to 1:30 p.m. Eastern Standard Time. Have a great Friday afternoon, everybody. Enjoy your weekend, and be back with us here on Monday. Happy trading.